Welcome to the deep dive. Today, we're tackling a really interesting story from the markets. How does a stock, seemingly out of the blue for some, surge, what was it, up to 21%?
Yeah, hitting a new 52-week high.
Exactly, all in a single day, July 1st, 2025. It clearly wasn't just one thing happening in isolation.
No, definitely not.
We're talking about Planet Labs, PBC. The ticker is PL. They're in the commercial satellite imaging space. And our mission here is to unpack this trifecta of catalysts that really lit a fire under the stock.
Right, we've got the sources, and we're going to dig into the strategic stuff, the financials, the technical market factors that all kind of came together on that day.
Yeah, the goal is to give you the key takeaways, cut through the noise so you understand why it happened, not just what happened, and what it means for Planet Labs and, well, the whole geospatial intelligence scene.
Precisely. We want to go beyond just the headlines. By the end of this, you should have a really solid grasp of the dynamics at play.
Okay, let's dive into Chapter 1, Business Understanding the Confluence of Catalysts. So the sources talk about a perfect storm. What exactly were these key drivers that converged on July 1st?
Yeah, perfect storm is a good way to put it. It was really three main things hitting at once. The biggest one, the real headline grabber, was the announcement that day of a massive contract with the German government.
Marcel.
We're talking 240 million multi-year agreement announced July 1st. The whole purpose is supporting European peace and security.
Okay, 240 million from Germany. That's a major G7 NATO partner. That sounds like a huge stamp of approval. What are they actually getting for that?
It's pretty comprehensive. Germany gets dedicated access to Planet's upcoming high-res Pelican satellites, including direct downlink over parts of Europe, plus access to their existing Planet scope and SkySat monitoring data.
So the whole package.
Yeah, and critically, it includes AI-powered solutions. Think enhanced situational awareness, maritime domain awareness, MDA, they call it.
The AI angle again.
Exactly. It's a powerful validation of Planet's whole satellite services approach, basically giving governments advanced capabilities without them needing to build, their own costly constellations.
Makes sense. So financially, does that hit the books immediately?
Well, the revenue ramp-up is expected more from January 2026, so no immediate change to their current fiscal year guidance. But the market saw it for what it is, a huge, multi-year, very visible revenue stream. It seriously de-risks their future growth picture.
Okay, so that's the main pillar. What were the other elements of this perfect storm?
Right, so that German deal was actually the highlight of a broader business momentum update press conference Planet held that same day, July 1st.
So they bundled announcements.
Sort of, yeah. It followed a string of other wins they'd racked up in June, like a seven-figure deal with NATO announced June 12th. That was for advanced monitoring, early warning, using AI and machine learning.
Okay, NATO too.
And a seven-figure expansion with the U.S. Navy for MDA, but over the Pacific this time. Plus, an extension with the NRO, the National Reconnaissance Office, for their critical EOCL program through October 2025.
So a real pattern emerging, especially in defense and intelligence. I think I saw their CEO, Will Marshall, quoted saying something about the geopolitical landscape driving interest.
You got it. He said the changing geopolitical landscape and modernization of security capabilities are driving unprecedented interest in our solutions. These contracts really prove Planet's strategic shift towards those higher-value, AI-driven solutions for D&I clients. It shows they're becoming a key player there.
Okay, that's two major catalysts, the German deal and the broader D&I momentum. What was the third piece?
The third leg was more technical but really important for the stock price action. Planet Labs was added to the Russell 2000 index.
The index inclusion. When did that happen?
It became effective June 30th, literally the day before the big stock surge.
And that matters because...
Well, it has a couple of effects. There's a mechanical one, passive index funds, like the big iShares Russell 2000 ETF, ticker IWM. They have to buy the stock to track the index.
Right, forced buying.
Exactly. Price-insensitive buying pressure, they call it. Apparently, IWM stake was already up like 2% just in anticipation.
Okay, so that creates automatic demand. Is there a psychological boost too?
Oh, absolutely. Getting into a major index like the Russell 2000 gives a company new legitimacy. It signals they've hit certain size and liquidity requirements, like graduating,
Yeah. Makes it investable for a whole new class of institutions.
Precisely. Investors who might have ignored it before suddenly see it on their radar.
So it really was this convergence. The Russell inclusion provided the technical setup, drew attention, and then bam, Planet hits the market with the momentum update, capped by that massive German contract. You can see why the volume exploded. You mentioned it went from maybe 10 million shares a day to over 43 million on July 1st.
Yeah, the timing was just, well, perfect to maximize the impact. Which brings us neatly into Chapter 2, Management Strategic Orchestration. Because, what's really fascinating is how this didn't seem like just random luck.
Right. It feels like there was some serious planning involved. How
Yeah.
much of this was management deliberately orchestrating the timing?
Well, the sources strongly suggest it was a very well-executed strategy. Think about the sequence.
Okay.
The Russell 2000 inclusion gets finalized June 30th. That creates the technical demand and gets eyeballs on the stock. Management knew this was coming.
Sure.
So what do? They pre-announced this business momentum update, specifically for July 1st. They primed the market.
Setting the stage.
Exactly. Then they dropped the German contract bombshell right into that primed market. It landed when the stock had technical support and investors were psychologically ready for potential re-rating. It maximized the news impact.
That's smart. It connects back to that broader strategic pivot you mentioned earlier, right? Moving more heavily into geospatial intelligence, especially for governments.
Precisely. It shows management wasn't just reacting. They were proactively positioning the company to capitalize on these strong secular tailwinds, as the sources put it, adapting to the global security needs. It looks like real foresight.
Okay, let's move to Chapter 3. Financials, a crucial inflection point, because this is where I think it gets really interesting for understanding why those catalysts had such a huge effect. They landed on pretty fertile ground, financially speaking.
That's absolutely right. The catalyst didn't happen in a vacuum. Planet's Q1 fiscal 2026 earnings report, which came out back on June 4th, 2025, really laid the groundwork. It provided the, let's call it the fundamental bedrock.
So what were the highlights from that report?
Well, first off, record revenue. They hit $66.3 million for the quarter ending April 30th. That was up 10% year over year, and it beat the analyst consensus.
Okay, solid top-line growth. What about profitability? Margins?
Margins saw a really nice expansion. GAAP gross margin climbed to 55%, up from 52%, and non-GAAP gross margin, which excludes some items, jumped even more to 59% from 55%.
That shows the model scaling, right? More revenue dropping to the bottom line.
Exactly. It demonstrates the leverage in their model. But the really big news, the landmark event in that report, was hitting positive free cash flow for the first time ever.
Ah, that's huge for a growth company. How much was it?
$8.0 million positive free cash flow, driven by $17.3 million in net cash from operations. It means they actually generated more cash than they spent running and investing in the business that quarter.
Wow. And wasn't there something about adjusted EBITDA too?
Yes, second consecutive quarter of positive adjusted EBITDA, which came in at $1.2 million. It's another measure showing operational profitability is improving.
So turning the corner on cash burn is a massive signal to the market. What about future business? Did the backlog look good?
It looked incredible. Their remaining performance obligations, or RPOs, that's contracted future revenue, basically skyrocketed 262% year over year.
262%.
Yeah, it reached $451.9 million. And their total backlog, including other contracts, jumped 140% to $527.0 million.
So nearly $500 million in committed future revenue.
Exactly. That gives them multi-year visibility, makes the business look much less speculative, much more predictable.
So you put that Q1 report together, record revenue, expanding margins, first positive free cash flow, huge backlog growth. It fundamentally changed the story, didn't it?
It really did. It shifted the perception from, a show-me story based on future potential to a business that's actually demonstrating a scalable, de-risked model now.
And their balance sheet. Do they have the cash to keep growing?
Seems like it. They ended Q1 with $226.1 million in cash, equivalents, and short-term investments. A healthy war chest. And their debt is super low, a debt-to-equity ratio of just 0.04. So they can fund growth, fund those new Pelican and Tanager satellites without necessarily needing to raise more money right away.
Yep.
That agile aerospace model helps keep costs down too.
Right. So looking back, the trajectory is pretty clear, growing revenue year after year, margins ticking up significantly, and now hitting that positive cash flow mark after years of investment. It's a real inflection point.
Definitely. Going from negative $93 million free cash flow in fiscal 24 to positive $8 million in just Q1 of fiscal 26 is a dramatic turnaround.
Okay, let's zoom out a bit in Chapter 4, market dynamics and competitive positioning. We've seen Planet's momentum, but what does it mean in the bigger picture? Where do they actually fit in the Earth observation market?
Well, the Earth observation, or EO market, is definitely seen as a long-term growth area. You see projections saying the commercial satellite imaging part could go from around $3.3 billion today to somewhere between $6 billion and maybe even $10.7 billion by the early 2030s.
That's pretty significant growth. What's driving it?
A few key things. Heightened geopolitical tensions, which we've seen fuel those defense contracts, big focus on climate change and environmental monitoring, and, crucially, the integration of AI and advanced analytics to actually make sense of all that data.
Makes sense. So within that growing market, what's Planet's unique advantage? What's their competitive moat?
They have several, actually. First and foremost is their fleet. It's the largest EO constellation out there, around 200 satellites. And that lets them do something unique. Scan the Earth's entire landmass every day.
Right, the scan versus tasking thing.
Exactly. Others often have to point their satellites or task them. Planet just continuously scans, creating this incredibly comprehensive daily picture.
And all that data they've collected over the years must be worth a lot, especially for AI.
Hugely valuable. That's probably their most defensible asset long term. They have this deep proprietary historical archive, over 3,000 images per point on land, adding up to more than 30 petabytes. You just can't replicate that overnight.
Yeah, a startup can't just go back in time and collect 10 years of daily global imagery.
Precisely. And for training AI and machine learning models, that historical depth is priceless. Then there's their business model.
The subscription model.
Yeah, the data as a service, or DAS model, it's one to many. Capture an image once, sell the data or insights derived from it to multiple customers across different sectors, defense, agriculture, mapping, whatever. The incremental cost per sale is low, so it scales really well.
And you mentioned their agile aerospace approach.
Right. Using smaller, cheaper satellites, iterating quickly on designs, it lets them deploy new tech, like the next-gen PlanetScope, Pelican, and Tanager satellites, faster and potentially cheaper than traditional players.
So it sounds like a strong position. Are the barriers to entry high in this space? Is it hard for new competitors to challenge them?
They are quite high, yes. First, the cost. Building and launching satellites costs hundreds of millions. It's not cheap.
Right.
Then there's the sheer technical and operational complexity of managing a large fleet and the ground systems. And finally, regulatory hurdles. In the U.S., you need NOAA licenses, and there used to be shutter control concerns, though that's easing up a bit. But still, it's not an easy market to just jump into at scale. It definitely helps establish players like Planet.
Okay, Chapter 5. Valuation and market sentiment. With all this going on, the contracts, the financials, the market position, how did Wall Street actually react? What are the analysts saying?
Well, the reaction around the Q1 earnings and those July announcements was pretty positive, mostly bullish.
Yeah.
You had Cantor Fitzgerald reiterating their overweight rating, bumping their price target up to $8.50 in late June.
Okay.
Citigroup and Wedbush also raised their targets earlier in June, both to $7. Needham kept their buy rating at $8. So the general consensus among analysts shifted towards a moderate buy or even strong buy.
What's the average target price look like now?
It's landed somewhere in the $6.60 to $6.81 range, based on the sources.
But it's always good to get a balanced view. Was everyone completely bullish? Any notes of caution?
That's a really important point. Yes, there was a notable counterpoint. Goldman Sachs actually initiated coverage right around that time, June 30th, with a neutral rating and a $4.60 price target.
Oh, interesting. Why neutral?
While they acknowledged Planet's strong market position, they expressed some caution about whether the overall market demand is strong enough yet for Planet to, quote, fully scale. They pointed to potentially longer sales cycles, especially given the tougher macroeconomic climate, so that adds necessary balance.
Okay, that makes sense. A reality check amidst the excitement. What about who owns the stock? Is it mostly institutions? Insiders?
Yeah, institutional ownership is pretty high, somewhere between 46% and maybe 58%. That includes big strategic backers like Google, plus major funds like BlackRock, Vanguard, Canada Pension Plan, and that Russell 2000 inclusion will likely solidify that institutional base even further.
And insiders, management.
They still hold a significant chunk, maybe 4% to 10%. You might see some filings about dispositions, but often those are related to tax withholding on stock grants, not necessarily insiders selling because they lack confidence.
Got it. And what about short sellers? Are people betting heavily against Planet?
Not really, no. Short interest seems relatively low, typically in the 2% to 6% range of the public float. That suggests there isn't a major, widespread bet that the stock price is going to fall significantly.
So putting it all together, it feels like Planet is moving into a different category in the market size.
I think that's fair to say. There's this idea of a legitimacy premium. They're kind of graduating from being seen as a high-risk, almost venture capital-style public company, to a more mature, small-cap growth story that big institutions are comfortable owning. That shift itself can lead to a re-rating of the stock, attracting new types of investors.
Okay, we've covered a lot of the positives, but no deep dive is complete without looking at the other side. Chapter 6. Risk, a comprehensive SWOT analysis. Let's break down the strengths, weaknesses, opportunities, and threats.
Absolutely essential. So, starting with strengths, we've covered a lot of these. Largest EO fleet, that unique daily global scan, the invaluable data archives, their scalable days model, the agile aerospace approach, and now, importantly, that improving financial picture, positive free cash flow, growing backlog, strong balance sheet.
Right, those are pretty clear. What about the weaknesses? Where are they potentially vulnerable?
Well, despite that recent positive quarter, they do have a history of net losses. Profitability isn't guaranteed yet. And maintaining and upgrading that satellite fleet requires significant ongoing capital expenditure. That's a constant need.
Okay.
There's also some customer concentration risk. A large chunk of their revenue comes from government contracts. While those are great, they can be lumpy or subject to political budget decisions.
Makes sense. Diversification is always good. What about opportunities? Where's the upside potential?
Huge opportunities. The growing demand in defense and intelligence is a major one, driven by geopolitics. Then there's climate change monitoring and ESG reporting that's creating massive new needs for the kind of data Planet provides, both commercially and for governments, and within their product offering. The big opportunity is moving up the stack, selling not just raw data, but higher value AI-powered analytics and insights. That's where the better margins likely are.
Okay, so D&I, climate ESG, and AI analytics. Finally, what are the threats they face? What keeps management up at night?
Competition is definitely intense. You've got established aerospace giants, but also newer, well-funded startups trying to carve out niches. Macroeconomic headwinds are a threat too. If budgets get tight, especially commercially, sales cycles could stretch out.
Any other external factors?
They rely on a limited number of launch providers, like SpaceX, to get their satellites up. Any issues there could cause delays. And there's always the threat of some disruptive new technology emerging that could challenge their approach, though their data archive provides a strong defense.
All right, let's bring it all together in Chapter 7, Conclusion, Strategic Outlook, and Investment Thesis. After digging through all this, what's the path forward for Planet Labs? What's the big picture investment thesis?
Well, looking ahead, their growth story is really tied to those next-gen satellites, Pelican for high-resolution, Tanager for hyperspectral data. Successfully deploying those and selling the new higher-margin data products they enable is key. That's expected to significantly expand their market.
And management's strategy seems focused there.
Absolutely. The focus is clearly on expanding those AI-enabled solutions, those satellite services, really boosting the value they provide to customers, which should in turn improve margins. Their guidance for fiscal 2026 reflects this revenue projected between $265 and $280 million, and the adjusted EBITDA loss narrowing significantly to somewhere between $7 and $12 million.
And that huge backlog gives them confidence in hitting those numbers.
It provides very strong support, yes. That nearly $500 million in RPOs offers a lot of revenue visibility for the coming years.
So for you, the listener, especially sophisticated investors considering PL, what's the takeaway recommendation based on our deep dive?
The key takeaway is that the July 1st events weren't just a one-day blip. They signaled a real inflection point for the company. Planet seems to be successfully transitioning from a heavy R&D cash-burning phase to a scalable growth phase. And that growth looks increasingly de-risked thanks to the clear, strong demand from defense, intelligence, and civil government clients.
So the recommendation is?
Based on the sources analyzed, the recommendation would be to initiate a BUY rating for sophisticated investors who understand the sector. The justification. Planet has a unique data moat, their financials are rapidly improving, and they're strategically positioned as a critical asset in the current geopolitical environment.
Even with the stock having surged already. And what about valuation? A price-to-sales ratio around 7.4x sounds maybe high for a company just hitting positive FCF.
It's definitely not a value stock in the traditional sense, but the valuation starts to look more reasonable when you factor in the high growth rate, the recurring nature of the revenue, especially those large government contracts, and the potential for significant margin expansion as they scale and sell more analytics.
So how should someone approach it? Jump in now.
Given the stock's volatility, it has a high beta, and the sharp recent run-up, a prudent approach might be to accumulate a position gradually, perhaps looking for entry points on any pullbacks. Maybe watch technical levels like the 50-day moving average.
And what's the next thing to watch for?
The next major catalyst will likely be their Q2 fiscal 2026 earnings report, probably early September 2025. Key things to watch will be, can they sustain that positive free cash flow? How quickly is the backlog converting to revenue? Are gross margins continuing to expand? And of course, any news on more large contract wins.
Okay. And just to leave our listeners with something to think about, as we see more and more commercial satellites mapping our world in ever greater detail, how might this explosion of space-based data change things? Not just global security or how businesses operate, but maybe even our basic ideas about privacy and accountability in the years ahead.
That's a profound question. The transparency it brings is unprecedented.
Definitely something to ponder. That was a fantastic deep dive into Planet Labs. If you found this discussion insightful and want more like it, please do like and subscribe to Stock Analytics AI. Remember, our members at $4.99 a month get priority deep dives on tickers, and we're planning to cover all the S&P 500 stocks over the coming months. Members get first access. Or if you just want a specific deep dive, dropping us a super thanks is always appreciated.
And just the standard reminder, the research and analysis we share today come from the source materials provided, and we may use AI tools to help synthesize and present it. Always do your own research and due diligence before making any investment decisions.